Trying to put in offers with a pre-qualification instead of a pre-approval is literally like driving your car without your seatbelt on.
Then make sure you get a second opinion, third opinion, and make sure that they are explaining to you all the questions that you have, so you're not having buyer's remorse or seller's remorse. So today we're going to be speaking about the differences between a pre-approval and a pre-qualification. On a high level, from the agent's perspective, a pre-approval is something that it's more detailed and to the nitty-gritty in regards to your numbers. And then a pre-qual is, first glance that you can say, how much do you make, what your W-2s are, and based on what you told me, we're going to pre-qualify you for this. That's not what you want. Let's talk to Ashley to see how their underwritten pre-approvals are and how they benefit their customers.
Yeah, so I get a lot of clients that go like, can I just give you my numbers over the phone and then you tell me what I can afford? On a deeper level, sure. Am I going to be able to get you a letter out to be able to put in an offer based on that? No, and I shouldn't. Trying to put in offers with a pre-qualification instead of a pre-approval is literally like driving your car without your seatbelt on. It's extremely risky. Nobody wants you doing that. So the pre-approval, we have verified the three big areas: your credit, your income, and your assets. And that's truly what we know helps determine whether or not you can purchase. So we as the lender need to do our due diligence for you and do our job to make sure that you're actually qualified, because the last thing we want is you putting down earnest money, inspection fees, appraisal fees. You've done all this work, your realtors negotiated all of this on your behalf, and then we tell you you don't qualify because of something that we could have checked ahead of time. So the pre-approval, what we're doing there is we're verifying everything and we're pre-underwriting your file. We are gathering documents to verify the information. We're looking for items that could come up as a red flag or an issue during the loan process so we can get ahead of those. That may be something like we need to verify your employment directly with your employer because the pay stubs don't give us all the information that we need. We're doing all this background work to make sure that your pre-approval letter is sound and it's underwritten, and we have confidence that if you put in an offer, you're going to get those keys, which again is really what you want at the end of the day. You want to know that your lender has as much skin in the game as you do during this process. So that's why we stand behind our pre-approvals and we don't do pre-quals.
Exactly. The last thing you want to do is get pre-qualified, get all excited, and then a week or two before closing, your lender is asking you for all these different other papers that you thought you were already done. And depending on the response time of you and the response time of the agent, response time of the lender, things can go happen and then you can have a delayed closing. So that's why it's very important to use a lender like ACM and Ashley and get a underwritten pre-approval for your best interest.
As the lender, I tend to be avoided like the plague sometimes when it comes for buying. Everyone wants to not have to talk to us because they don't want to talk about the true numbers, what that mortgage is really going to look like, what interest rates may be at, because it's not a super fun conversation all the time.
Right.
And it can be kind of sobering of what mortgages are nowadays. What are you guys on the realtor side telling buyers who want to buy but don't know if they should be buying and are on the fence? What are you guys communicating to people?
So the first thing we do is, we get to know them and see what their interest is and what are they looking to get out at the end? What are their goals? Because if someone is like, they've been in their house and they're upgrading, but they've only been in there for 2 years, they're not going to have as much equity built as somebody that has been in there, 4 to 6 years. Okay. So just looking at the numbers and making sure it makes sense. Just because you're talking to a realtor, they're not going to make you work with them. They're not going to make you purchase a house. They're not going to make you sell your house. If that is the case and you get to a realtor like that, then make sure you get a second opinion, third opinion, and make sure that they are explaining to you all the questions that you have, so you're not having buyer's remorse or seller's remorse. So being able to understand what that underlying factor is that you are selling your house or buying a house, you need to take all the numbers, put them together, and say, all right, if you were to sell your house right now, you can walk away with $150,000, or you can walk away with $75,000. Do you have any debt? Do you have any bills that you need to pay? What makes sense for you? And all right, your interest rate right now is this, say 3.5, but the interest rates that new builders are providing is 4.9. That's a big difference than having a market rate at 6.57%. So just going through all the numbers to make sure that it makes sense for you to go to a new construction home or a pre-owned home at whatever rate you can, that's when we figure out what's best.
Yeah, and I think it's really important. We do it on our side, on the lending side, and you guys obviously dive quite a bit into it. It's just that why. Why do you want to buy? I very, very rarely have a conversation with someone and I'm like, what are your reasons for buying? And they're like, oh, because I want a mortgage at X amount of dollars a month. Mm-hmm. That's the second part of it, but that's not why they're buying. It's typically, job related, or you need more space, you've got a family that you're building, or you're trying to build equity. Mm-hmm. Right? It's a business decision as well. So you have to keep those whys in mind and understand that we can't control some of those other numbers. I don't get to control interest rates. You don't. We don't really get to control home prices. Same as cars. We don't get to control those prices, but we keep on buying cars and we keep on driving them. So
Right.
houses can be the same way. And I think we talk a lot about on the lending side ways to overcome some of those negative pieces. Maybe if the interest rate is your biggest hang up and you don't know if you should buy in this environment, then we talk about how you can get seller concessions to help permanently buy down your rate or do temporary buy downs that could save you a substantial amount per month versus just negotiating the price, or
Right.
again, down payment assistance programs that have lower rates, or builder incentives that may have lower rates. So I think for whatever the reason no is, we probably have a way to help you with that.
Right.
Yeah.
You know, there's a lot of people that do have 2% interest rates, but they have credit $50,000 to $75,000 in credit card debt at 25%, as well as a car payment at 7 to 11%. So if you put all those things together and put numbers in front of you in order to figure out, all right, if I was to use my $150,000, $200,000 in equity to pay off some of the debt, as well as, you know, we're going to be at, say 5.5 just to get an average, you're going to be paying less at the end of the day if you were to move up and buy a new home and get out of that 3% stuck rate that you have.
Yeah.
So get in contact with us and we'll be able to go through all the numbers and hopefully help you understand what's best for you.
Yeah.
We'll talk to you soon.